So maybe you're wondering, what is this ABLE account that I might set up for my loved ones? What are the benefits of it? Do I really need one? In this video, we're going to talk about all of that and more. My name is Ellen Cookman, and I'm an estate planning attorney who specializes in special needs planning. On this channel, we're going to talk about how to set up a special needs trust to protect your loved one who has special needs. We'll talk about the importance of setting up a trust, what's the difference between a regular trust and a special needs trust, regular estate planning, a revocable living trust, how to avoid probate, trust administration, and many other relevant topics. If this information sounds useful to you, please consider subscribing and hitting the notification bell so that you'll be notified when new videos come out every week. I'm a certified specialist in estate planning, and my law firm has helped hundreds of families navigate the complicated process of setting up their estate plan with special needs components. I'm excited to share all of the knowledge that we've learned over the years with you. So let's get right into it. So an ABLE account is a wonderful savings tool for a disabled person that doesn't interfere with their public benefits. ABLE accounts were developed back in 2014, 2015. There was a group of families in Virginia, and they had adult children with Down syndrome who were working, but if you're familiar with needs-based public benefits, you have to spend down your money down to $2,000 every month in order to continue to qualify for SSI and Medi-Cal, which is known as Medicaid in other states. But in California, it's Medi-Cal. So this isn't fair. These kids couldn't save up their money that they were earning. So there was great bipartisan support in Congress to pass the ABLE account, which stands for Achieving a Better Life Experience. And this wonderful ABLE account is set up so that a disabled person gets one account. They have to have become disabled before age 26. And they can put in, or other people can put in, up to the annual exclusion amount into that account each year. So last year in 2021, the annual exclusion amount was $15,000, but it just went up to $16,000 per year in 2022. So that's the total amount that you can put into an ABLE account. Except that if your child is working and supporting themselves, they can put in an additional about $12,000 a year of their own earned income. So you can imagine that this is a wonderful way for kids to save money and be able to spend it on things that they want. So one question is, who's going to manage this account? Well, if your child has capacity, they could manage it themselves, or you could manage it for them. So when you set up the ABLE account, you choose who's going to be the manager of the account, and you just provide the information on that person who's going to be managing it. So you might be thinking, what kind of disability qualifies for this? Well, it could be any number of things. It could be a developmental disability, it could be a mental health challenge, it could be a physical disability. But the main limiting factor is that it has to have developed by age 26. So in Congress right now, there's some proposals to increase that age to age 46, but that hasn't passed yet. So we're still looking at age 26. Now this money can be spent on many different things. It's called qualified disability expenses. So basically this is anything that the child needs to live on, right? So it can be food, housing, education, getting around, many, many different things. It's not supposed to be used on like frivolous things or round the world trips or gambling. And the way that it's spent, you're supposed to keep track of it, but it's hardly ever audited. So to set up an account, you might think, great, I'm going to go down to my local bank and ask for an ABLE account. Well, unfortunately, it doesn't work that way. But fortunately, there's an easy way to set it up. The one way you can set up an ABLE account is online in California, at least. Each state has their own ABLE account, and in California we have a CalABLE account because we always have to have a cutesy name for our account. So it's a CalABLE account. So you go onto the website. Right now the website is www.calable.ca.gov. So go to calable.ca.gov, and a page will come up that says set up your own account, and you press the orange button and it asks you for some information and you fill it out, And then that actually helps you set up the account. Now you also go to your favorite bank and you set up a checking account at that bank. And the checking account and the ABLE account are going to talk to each other. This account was actually modeled after a 529 plan. It's actually called a 529A plan. So if you're familiar with education savings accounts, it works very much the same way. So the money is held at the bank that you like, but it's kept track of on the back end by the company actually in California is TIAA CREF. They're the ones that keep track of it. So they talk to each other, and that's how it functions. So the way that taxes work with ABLE accounts is that you put in post-tax money, you put it into the account, and then it grows income tax free. And as long as you withdraw the money for qualified disability expenses, you don't have to pay any taxes on it. That's also the way a 529 plan works. So it's really favorable from an income tax perspective. So let's say that you're a parent and you're thinking, when should I set up an ABLE account for my child? My answer is, there's no drawback in setting it up right now. Your child could be any age and can really benefit from this. So if grandma wanted to make a gift to Johnny of $10,000, there's really 3 ways that she could do it. She can make a gift directly to Johnny. She can make a gift to Johnny's Special Needs Trust, or she can make a gift to Johnny's ABLE account. So let's talk about how each one is impacting this. One use of these ABLE accounts is to receive gifts. So let's say that grandma loves giving $10,000 gifts every year to her grandkids. What a wonderful thing to do. But you know that if she gives a $10,000 gift to your child who has disabilities and is receiving public benefits, that could bump them off their public benefits. So perhaps in the past you said, well, you know, don't give a gift to Johnny because that could interfere. Well, now she can give a gift to Johnny's ABLE account. The $10,000 goes into the ABLE account and it's protected so Johnny can continue to receive his supplemental security income and his Medi-Cal. So it's win-win for everybody. If you have any family members who want to help out, or if you want to make contributions, that's a good time. I think one of the most exciting uses of an ABLE account is actually to protect SSI benefits. So I want to describe how this works. So if you are currently providing housing or food to your child who's receiving SSI, most likely your child's SSI benefits are decreased by about 1/3, by about $250. So in California, you can get about $950 in SSI per month, and that's supposed to provide for your food and housing, which is a joke really, right? Especially in California. But it's decreased even more. So it goes down about $250 a month to maybe $700 a month if someone else is paying for your food and shelter, because SSI is intended to pay for food and shelter, and they assume you don't need as much money if somebody else is paying for your rent or your food. But here's how you get around that, and this is perfectly legal, okay? So what you can do is you can make a gift, the parent can make a gift to the child's ABLE account, and then the ABLE account pays for the food and shelter. The ABLE account is considered the child's own money. So the child's paying for their own food and shelter. There's no SSI deduction. It's a wonderful way to make sure that all of the SSI money is protected. Now, one wiggle in that is now your child is paying you rent if your child is living at home. And you have to report that as passive income on your own income tax statement. But it's really a great way to protect those SSI benefits. So there are some limitations on how much can be held in the ABLE account. So let's say you're putting in $15,000 a year. Once the account hits $100,000, the child's SSI is suspended, but they can continue to receive Medi-Cal benefits. You can put into the ABLE account the maximum amount that a 529 plan can hold, which currently in California is over $500,000. But because of the SSI limit of $100,000, most people nowadays are keeping their ABLE account under $100,000. So if you set up an ABLE account for your child, I'd appreciate it if you write in the comments below which state you set it up for. I know California, it only became available a few years ago, so some people have set up ABLE accounts in other states. Ohio has been very popular. Perhaps you have assets held in different states, or you're thinking about moving, you might set up an ABLE account in those states as well. So I have another cool tip about ABLE accounts as well. So let's say that grandma wants to make a gift of $15,000, but she knows that if she makes the gift directly to your child, Johnny, it'll interfere with the benefits. But Johnny already has a special needs trust set up. If she makes the gift to the special needs trust, it does not qualify for the annual exclusion. Okay, so she actually has to report that gift, even if it's $10. She would need to report that gift to the IRS. And the IRS keeps track of the gifts that grandma has made. And once that exceeds the total amount that she can give over her lifetime, which this year is pretty high, by the way, it's $12,060,000. Okay, but once it exceeds that, then she has to start paying gift taxes. But it's just a pain to have to report gifts on it's called a Form 709. It's a gift tax return. So you don't want to do that. However, if grandma gives a $15,000 or now $16,000 gift to Johnny, then, and it goes into his ABLE account, she doesn't have to report that to the IRS because it's considered a completed gift and it qualifies for the annual exclusion for Johnny. Even if Johnny is not managing the account, it still counts as his money. So it's a direct gift from grandma to Johnny and there's no income tax reporting required. You might also be wondering how to set up a special needs trust for your loved one. So for information on that, I have a full-length webinar to help you understand all about special needs trusts, how to maximize your child's independence while maximizing public benefits, and also how to avoid the court system. So please download the webinar below by clicking the link. So now you know a little bit more about ABLE accounts. Be sure to check out this video next, where I talk about how to set up a special needs trust for your loved one. So watch this video right here and I'll see you on the next video.